Peter McGuire, Chief Executive Officer of XMCom, who is joining us from Sydney in Australia, and Jamal Qureshi, the Managing Director of Strategy and Analysis at Petro Logistics. Peter McGuire, Chief Executive Officer of XM Australia, commodity demand is set to increase this year, driven by interest rate cuts by central banks. And according to reports, apparently we could see potential commodity returns as high as 15%. Gold has hit its highs. Oil prices also had it higher in recent weeks. And OPEC Plus is holding an online meeting next week to review the market and members' implementations of output cuts. I would like to get your thoughts about OPEC going to adjust its output policy, whether it is going to be like this or not, and how do you see the oil prices evolving as we are getting into the second quarter of the year, but also on commodity prices?
Yes, exactly. And I welcome, Eva, and nice to join you from Sydney, Australia. As we put the first 3 months to bed, and Easter this Friday, it's been quite an extraordinary time, as you mentioned, for gold, if you like the likes of the commodity sector. Some of those, if you look at the price of cocoa for chocolate, it's more expensive now than copper. It's been ballistic and absolutely parabolic over the last couple of months. So there's just an example. Now, as we work through, and as you said, as far as the OPEC situation, I feel as though second quarter you'll see an increase as far as demand. It's not unusual, and probably driving season and a lot of other conditions that are going to, I think, ramp up demand. And where OPEC sits, I think they'll probably, I don't suggest they're going to change anything, because I feel as though that the prices really haven't materialized to where they would be absolutely happy, and that's probably closer to 90. And it's whipsawed very much since really what we saw at the start of October. You're looking at the gold market, we're only $28, $30 off an all-time high. We're just sitting right now at around about $2,199. So it's very, very strong, and we've got many central banks that are looking at cutting sometime over the next 3 months. Is it going to be 3 cuts for the Fed? How's that going to impact as far as equity markets? We've got huge demand for equities. If you're looking at Japan and certainly the US have just at record highs. So there we talk as, strong growth. And so I'm not expecting any surprises coming from OPEC. Sit here from a trading perspective, and I'm suggesting we're going to be stronger over the next 3 months than where we are at this present time.
Which will have the biggest influence in oil markets in the second quarter of 2024. Make your choice. Is it going to be geopolitics, OPEC plus supply cuts, China outlook, or US economic outlook? So yes, Peter, please tell me your thoughts about what James is saying.
Oh, look, I'm building on James. I mean, that as we know, we're not running out of oil. And this is where the whole argument comes from. Alternatives, where we move forward, the electric vehicle story, what's happening as far as consumption, a country like Australia. Should we have significantly greater, the land mass of the country, we've got deserts, and we're surrounded by oceans. Should we have solar from here to Perth, a 4,000 kilometre, just solar farms? What should we do as far as gas production? Where does Australia play in all of this? We're a powerhouse when it comes to commodities, from iron ore to what we can grow in the ground to what we can retrieve from the ground, from diamonds to gold to all things energy. So I think that we are in a very interesting phase of markets, and where we look at from a retail perspective, because I think it's the attraction. As James said, you're down 130 rig count on Baker Hughes. You had a high there in 14, I think it was around 1,400, and where you are at the moment. So what do we have to do to get those drillers back in? Is it going to be price that's going to drive it? Is it going to be 105 WTI that guys say, hey, I'm giving the bar job away and I'm going back to wildcatting, man. I'm going to, this is where the attraction is. So, all of those drivers, I think, are going to be interesting if we do see higher prices, which I think we're forecasting. pretty much in the second and third quarter. I think there's a lot of big themes that are going to play out over the next couple of months leading into an election cycle. And I think it's going to be quite fascinating from a volatility perspective.
So let's have the results of the survey question before we wrap up. So we have 44% of our participants saying that, yes, geopolitics will have the biggest influence on oil markets. I would like to know, and then 33% say it is OPEC plus cuts. I would like to know what you are saying. Peter, what do you think about geopolitics?
Well, I voted for geopolitics, and I do think that they're going to play a very significant part as far as oil and price over this second quarter. I think there's many hotspots that we're seeing start to flare up, and I wouldn't be surprised that oil's going to have a spike in this second quarter. I think there's a fair bit of uncertainty as far as rate cuts, when they're going to materialize. The inflation story, I'm not sure, is under control. And all of these factors are going to, I think, impact price. And it's going to be, I think, a very dynamic 13 weeks of trading for the oil markets over Q2.